Hello, ladies and gentlemen. Um, Today we are going to look at the recording that we did, some of the trade we did on August 8. On August 8, we put together a program thereby we look at two different programs. We said program one, program two, program three. Program one, we put together a program whereby we want to see whether to buy or to sell. As for anybody who is an option trader, this is for option trader, we are always told that it doesn't make sense to buy. It doesn't make sense to buy options. The one that is fully advocate to us is to sell options. It's more profitable. That's the one that is fully promoted to us. So I tested that. I said on August 8th, right here, right there. I said, okay, I'm gonna go in and look at the Magnificent Seven stocks. I'm gonna buy call and I'm gonna sell a call, a put at the same time frame. However, the deltas will be different. So this is based on the common practice. People would buy a leap or they would sell put options. So I said, okay, let me go and do that. And then see, and then just keep tracking it. So I'll be doing videos to track that process. And these are the program that I put together. Trading program. I don't know if you are seeing here. It's a trading program. We want 3 programs. It's going to be testing 3 programs parallel together. And they will be Magnificent Seven. The Mag 7, which is Amazon, Apple, NVIDIA, Microsoft, Tesla, Google, and Meta. So program 1, I will be buying 7 Delta calls, 70 Delta calls or put at 90 to 120 days. So we would buy 70 Delta calls or put based on the trend in the market at 90 to 100 days. We would buy when the trend tracker is positive. When we say trend tracker is this indicator here. If it is positive, we're going to buy. We're going to sell when it's negative. And we said the EMA distance cross below 8, we would sell half. And we would sell half. And then the trailing stop would be 1.7. If the trailing stop is 1.7 negative, we will, the trailing stop would be 1.7. Now you can see we have made some changes on our graphs right now. On the chart, we have made some changes in there. The trailing stop, we don't see it, but we see another line, which we would explain. And so the second program, we will sell put on a call at 30 to 20 Delta around 90 to 100 days. We would cover when the loss is 100%. We may move this to 200 depending on our observation. We would buy back. If we make a profit at 50%, we would buy. We would cover that 50% profit. So it is basically the reverse order 2-to-1 ratio. If we have 50% profit, we would take that profit. Why do we do that? Because it's easy. It's easy for the stock to move from 0 to 50% than from 50 to 100%. When the delta gets to between 50 and 100, it takes a long time. So that's why we would take advantage of that early level. But at times we may let it go to 50, 60. Then the next program, we want to learn how to adjust the trade. We pick 5 stocks, and we said we want to be able to do the adjustments in those stocks to see how they goes. Now let's go and see. On August, we started this in August. The reason I'm bringing this today because I missed. There have been a lot of time that I didn't bring this in. I was going to do it daily, but unfortunately, it wasn't possible. But I think today is a very good day to do this. If you look at August when we did this program right now up to today, we have an overall year-to-date earning of $58,000. $58,000. Our net lake was about 100,000, about 300,000, but you can see we only use just 200 or under. That's what we use, or under. Now, if we look here, now we're going to go through this and then do our comparison. The reason I want to do this today, because today the market went down quite well. SPX. We can see a big drop down in SPX right here. It closed below my exit point. But again, if we look at the QQQ, the Q is also the same thing that we are seeing. NDX. Oh, NASDAQ or DJX. I was going to say DJX, Dow Jones Index. So we have seen a similar pattern. The market went down 2 days in a row. So that's why this is a good system to look at. Today, the market went down and our P&L went down by 11,000. From this experiment, what we learn is that, just take a look here. Let's look at Apple. Our profit in Apple in Excel So what we see here is that when we look at this, if we look at Apple, let's start with Apple. Okay, we see that Apple we have 87%, 87% in profit since August 8th when we started this program. We have 86% here, and if you look here, this one is we sold puts. We sold puts at 20, between 20 and 30, in between that. So we sold a put. Now we can see when we sold the put, now we have 45 days remaining. But look at here, we have 47%, 87% in profit. The P&L is 850. Here, this is where we sold, where we buy calls. If we open here, you can see November 2025 calls. November 21st, we bought a call. Is 45 days remaining. But we have 84.75%. Now, look at the P&L. Look at the P&L here. Here we have 850, and here we have 397. Well, one could say the amount of money we pay on this one is little higher than what on this one here is higher than what we pay here. But this one has a buying power effect that goes up and down. But we went in and buy two of this and then sold two. If we just go by the number of shares that we purchased or sold, we have seen a drastic difference in the profit in the P&L here. This other one gave us about $4,000. This other one gave us how much? Just 850. That's a significant difference. Today, we saw that the market being down. Let's look at Apple. AAPL. Let's look at Apple. Apple was down too, and we see Apple is going on a sideways. But even though when we put this trade together, it was here on August 8th when the Apple made this big move. We saw it went down, a breakdown here, went up. On this one, on this side, we saw the same thing. What we learned in the process is that if we go by considering some of the indicators, here we would have getting out and then go in, get out, go in, get out, go out, just completely go in here. We would have done that. Okay. But in this trial, we did not get out. We just stay in there. And here, when we sold, because of the fact that that's based on 50% and 100%, so our test is a little bit off. It's a little bit off. There are times when it went all the way out, we lose some profit. We could get out and then wait until we get here. So that one we would continue because we would continue running this test and see, try to be true to the rules that we put together and see how it will. But considering the results right now, we see a significant difference between the two. Let's look at Amazon, AMZ. Amazon can be a very good test again. We sold Amazon here on the 8th, and that's when we purchased a call also. We sold and purchased a call. Let's look here. So we have 45 days. This one, we see a delta of 70. We started at 70, we are in 70 delta. Here, we sold at 20 delta, around 20 delta, but we are at 30. Now let's go and look at that. Amazon, we are up, even though Amazon started, we are basically a little below where we started because we started up here. You can see we are a little below, but we still make money, 350, 340 at 22%. Now we see Amazon here. Without this process, by buying a call, we have sustained a loss of 750, 755, a negative 16% or 17% in loss. What do we learn from that? When the stock is trending, buying a call would be more profitable. When the stock is trending, buying a call would be more profitable. When the stock is going on a sideways, as we saw Amazon on this days here, you can see it forms a lower low, comes down, it even went down, it went below. Selling a put tend to be more profitable when the stock is going on the sideways. And again, it looks, because you can see it even went below where we sold the put, but we're still making a profit because of the time it takes. 90 days, around 90 days, right now we are 45 days. Okay? So that's what we see here. When the stock is going on a sideways, we can make money by selling puts. We would lose money by buying calls. Then let's continue and see whether that assertion, whether that statement is correct. So we saw a Google here. Google has 89%. And here we saw 179%. 89%, 1,200, 179%, 758. Would we not want to have this in our account? Let's go and look at Google. Look at Google Alphabet. We purchased this. We purchased the stock right here on August 8th. From that end, Amazon just took off. It was just going boom, 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 boom. So we see a significant difference in our profit. When the stock is trending, if you want, you can put it, you can even do this. You put a moving average, this is a 9-day moving average. As long as it's following that 9-day moving average, just buy a call. Just buy a call. You have a greater chance of succeeding when that is happening than if you just go and sell a put. If you sell a put, yeah, you are guaranteed a profit until it drops below where you sold it. But you can see you can make a significant profit. 7,000 and 1,257. So it looks you are leaving money on the plate. You are more leaving money behind you. So that has proof that when the stock is trending, continue doing that. Now, is that true? Let's look at Meta now. Let's look at Meta. M-E-T-A. We look at Meta. So we are seeing some significant different movement here. In the normal circumstances, when this thing turned red, we will get out. We normally want to even get out when this moving average is red, but we didn't. We leave it that way. But when this is red, regardless of what, in my own trading, I get out. We didn't. We stay in. It went all the way down here. It comes back up. And now it turns red. We have double red, and we still stay in. In the normal circumstances, we would. But we are trying to test this more. We are trying to find out, does it really tell us the impact that it would happen if we stay until we go in the money? So let's see how close in the money we are for Meta. We are still not in the money, but we are at 41%. Here we are completely out of money. We sold this at 70 delta. We are all the way out. So 70 delta is around here. around there. So it means we put 7,000 there. Right now, we are around 40. So close to 3,000, I would say maybe 3,500 down. Is it showing us the same results? Let's look at it. We saw that in the normal circumstances, there's no way we would stay in here like that. We would get out around 65 or at least around 756. We would get out. But let's see. Meta is here. We are down by 48%. That's 2,200. Look at here. Meta is down by 51%, by whopping 8,750. If we ignore, if you buy a call and you ignore your rule, you're going to lose a significant amount of money. If you said, I'm just going to keep this, trying to regain in it, you're going to lose, you may blow your account. What do we say? When you sold a put and it goes down, you would lose money. But it may not be to a point of losing your account unless you have used a significant leverage. You use a lot of your margin. But if you buy a call and you are not careful with it, you buy a call and you are not careful with it, will result to a significant drawdown for you. We can see 51% of that, a drawdown of 8,750. And here we saw only 2,200. So what this is telling us that buying a call can be very profitable, but it can be detrimental if you did not control your losses, if you did not do a good money management. You have to follow your strategy or it would break you into pieces. Now, let's go and look at Microsoft, MSFT. So we have the Microsoft here. Where did we buy? We bought Microsoft around this level here. So Microsoft going down. In the normal circumstances, I would not buy this, but we purchased this since we are testing the results. When Microsoft went down up to this point, I would have gotten out because here we see that it has a lot of falls in and out. So we may not consider this moving average, but when it turned red, we would get out. But I still stay in, and now it became positive. Let's see what that impact will be on us. Here on the Microsoft, we see we have a 33% profit. 33%, 935 Microsoft. Then if we look here, we have a negative 1,280, 1,200. Even though here we have a profit, but on this one, we have a loss. We have a loss of 1,200 or 1,300. Okay? Now let's go look at NVIDIA. So again, it's the same thing. Here we are recovering for sure. There was a time that when we lose a lot of money here, but since we are recovering, most of those profits are coming back. But in the normal circumstances, make sure you put a stop. We said, okay, when the stock drop down to a certain level, I'm going to get out. You can use a moving average. You can use this moving average we use, or you can use our indicator to ensure that you don't ruin yourself. Microsoft, from this end, we see that has not been doing well. When you compare this to SPX, Microsoft has been going down. Currently, we see some movement. It is starting to trend up, starting to be going higher than the SPX because we see some movement in here. The moving average is coming down because of this movement here. The moving average is coming down. At certain point, at this level, I would not want to go in here. But when this thing picks up and it crosses and it comes down, I think Microsoft will be a good buy. It will be a good buy because it will show that the strength is higher. It is outperforming SPX. In those situations, when you go in, you can harvest a good sums of money. Now, let's look at the other one. Let's look at NVIDIA, the Wall Street darling for 2024, 2025, or maybe 2023, 2024, 2025. We have seen that NVIDIA, we went in here, NVIDIA went down, and then now it's going up, and then this few days it has been going down. Okay? What does that tell us? NVIDIA, we still have 44%, even though we went through this downward movement. We tell F4 to check. Farmer, can you check Farmer? Okay, so if we look here, we see that it went down and it's catching up. Let's go to the next. We see some profit. But here, NVIDIA is losing by 500, even though it's a small amount, but it's still losing. That's why when the stock goes to a level, cancel it, and then pick up again. Let's go to the next one. For Tesla, we see a Tesla 3,490. Here we see $16,000 in profit for Tesla. What happened? Where do we start? We start here, Tesla took off. We make a $16,000. What is the percent of profit in that? 151%. 187. So when we catch those profit, when we catch those things, it can swing high. So when you happen to catch those to run, it can be very rewarding if you buy a call. If it goes against you and you decided to stay, it will burn your life. So those are the things that we learn. I would continue. I think this experiment, I'll close this and put together another experiment to see. For the ones that we said we're going to learn how to do some adjustments, we have seen Boeing. We hold on to Boeing and it went down and we were assigned a stock. Then when that happened, we were assigned a stock. I went in and then sold put a call against it. So basically, it was like a covered call. But again, you can see we're still losing from there. So let's see. PA. Boeing has been going down and down. Went down to up here. Now, I think I saw the call around here. You can see it's going up. If I happen to sold it here, I would have reduced my cost base a lot. But I just sold a call around here. Even though it's going up, I'm losing the call because the call is increasing in value. Now let's see how that is going. Yeah, we saw the call here. And but it's still, we're still fine because 30 days, we still have about 24 days and we are not in the money yet. So at this point, we are fine. Yeah, if it gets in here, then I may have to do some adjustment. Some people would just wait until we get to a certain level, but at times it could go out of hand. When it gets to this level, I may have to do some adjustment. Because you can see it's giving me a positive upward movement. It looked bullish based on my indicators. And you can see it's coming up. So therefore, when that's happening, I'll make sure that I make the necessary adjustment. But this is what I have to show today. I think it's quite interesting to see. So thank you, everybody. Stop recording.